I'm actually afraid. I'm afraid for the first time. And that's a big statement, but I'm afraid for the first time. I have been talking about the then they fight you phase again for over a year. And I've been talking about us versus them and us on the crypto side and the digital side and the Bitcoin side. But here's the thing. Operation Choke Point, people think, oh, they did that. Oh, no. I understand it from talking to some kind of people on the ground at different projects. There's some bad stuff coming.
On Thursday, one of Wall Street's largest companies, asset management giant BlackRock, joined the long list of companies trying to bring investors closer to the cryptocurrency industry. The Wall Street giant, which manages almost $10 trillion in assets, caused a slew of mixed reactions in the crypto community when it applied to the U.S. Securities and Exchange Commission, SEC, for a Bitcoin exchange-traded fund, ETF. Some members of the cryptocurrency community believe BlackRock's application and eventual approval, given the firm's high ETF approval rate, will help crypto asset prices. But others are critical of the move. According to people in this category, BlackRock's business ethics contravenes everything the cryptocurrency industry represents. Others have also pointed out that the proposed product is technically a trust, but experts say it is functionally the same as any true ETF. According to the filing, BlackRock is applying to launch the eShares Bitcoin Trust, which it says would allow easy access for investors to get exposure to crypto in a product offered by the world's largest asset manager. A section of the filing reads, "The shares are intended to constitute a simple means of making an investment similar to an investment in Bitcoin rather than by acquiring, holding, and trading Bitcoin directly on a peer-to-peer or other basis via a digital asset exchange." Over the past 10 years, several investment firms have applied for a Bitcoin ETF, but the SEC is yet to approve any, often citing concerns about market manipulation. Last year, Grayscale Investments filed a lawsuit against the SEC for failing to approve its application to convert its Grayscale Bitcoin Trust, GBTC, to an ETF. Other asset management firms, including Cathie Wood's ARK Invest, have also had their spot Bitcoin ETF application almost immediately rejected by the regulator. But experts say this might not be the case for BlackRock, which in addition to being the biggest investment manager, has also partnered with the Bank of New York Mellon, another reputable financial institution, which the application notes would be the custodian for the trust's cash holdings. BlackRock will also be working with Coinbase as a custodian despite the SEC suit against the US-based exchange. During the latest episode of his weekly roundup with Blockworks Macro, renowned hedge fund manager and crypto enthusiast Mark Yusco discusses what the spot Bitcoin applications could mean for the entire crypto space, especially considering the firm applying for it. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks and enjoy the video.
We said it on this show over a year ago, saying no one else will get approved except BlackRock. Yep. The only person who will ever get a spot ETF is BlackRock. And there's a reason, because they're inside the tent and we're outside the tent and anyone competing. But here's the thing. Operation Choke Point, people think, oh, they did that. Oh, no. I understand it from talking to some kind of people on the ground at different projects. There's some bad stuff coming. Actually, what I'm really afraid about is if the SEC does what it appears they're going to do in terms of declaring all of it, except Bitcoin, a security, and anyone who's transacted in any of this stuff is kind of a criminal. That's going to be bad. But where does it stop? Are my Pokemon cards securities now? Is my Magic the Gathering game a Pokemon? I mean, is that a security now? Again, it's not in my best interest to criticize the people who regulate me. I know that. So don't come for me. I'm actually, I'm starting to really appreciate what I've been talking about, which is they, and we know who they are, right? It's JP Morgan, BlackRock, and all of the controllers of the money and power felt threatened, as they should have, by a disruptive innovation that will. I'm not going to back down from will replace them. Right? The infrastructure of trust will be replaced by the infrastructure of truth. It just will. But man, the war is going to be bloody. The implied ridiculousness of, I had a guy respond to me, this is negative, or no, this is a bad thing. I'm like, no, it's not.
Yeah.
But what they're implying is that money isn't pure. I mean, it's literally like mudbloods and purebloods from Harry Potter. That money's not pure. We don't want that money converting into to Bitcoin. Well, of course you do. You want any and all fiat of any kind and any variety to convert to Bitcoin, because the bigger the network, the bigger the safety, security, the more adoption, the more that's the only way the value of a network goes up. Is there more participants? And so to say that, well, they're the enemy. Well, they might be, right? BlackRock and JP Morgan, I shouldn't accuse people directly, but it's hypothetically possible that since November of last year, when the futures-based ETF was issued, it's entirely possible that those large institutions have been shorting the shit out of Bitcoin. It's entirely possible. In fact, it's highly likely because we have proof in the gold market that they do. And every year they make billions of dollars shorting the future and going long the physical. And it's unbelievable to me that that's okay, right? That JP can pay $1 billion fine, $1 billion, but say, oh yeah, we made 20 billion, so that's 5%. Who cares?
Cost of doing business.
And it's cost of doing business. It's clear that happened for a portion of this downturn, because it's to the day that it started. Now, yes, it was exacerbated by, Sam, and it was exacerbated by, bad people doing bad things, but it just is.
On Twitter, several other prominent figures in the Bitcoin and overall crypto community have also reacted to BlackRock's application. Popular anonymous Bitcoin analyst Plan B tweeted, "Congratulations to all Bitcoin sellers for the last 2 months. You have been selling to BlackRock, front-loading their ETF." CEHV founder and partner Adam Cochran also put out a bullish thread, part of which reads, "People don't realize that BlackRock really made the gold market as we know it today. Pre-BlackRock, it was a $1 trillion market. Now it's about $13 trillion. BlackRock, through its army of advisors, pushed the narrative that gave gold broader legitimacy in a portfolio. Its network told millions of users that you needed gold to have a well-balanced financial safety net. After doing this for 2 decades, we now find that young wealth managers and economists who have climbed to seats in central banks and sovereign wealth funds view the gold as portfolio safety narrative as a no-brainer. The same will hold true with crypto. BlackRock will arm advisors to educate millions of consumers on allocating X% of their portfolio to crypto and change the narrative entirely." According to macro guru Raoul Pal, the ETF might be Gary Gensler's cold comfort gift for the cryptocurrency industry. Here's a tweet from the Real Vision Chief Executive Officer. "It seems pretty obvious to me that Gensler is giving BlackRock the Bitcoin ETF nod and also got that Prometheum circus going to prove that he isn't stopping crypto entirely. It's all politics, and in the end, he throws a bone to Wall Street so he can suggest they are more trusted." Let's know your thoughts about BlackRock's ETF application as we bring you more clips from Yusko's discussion, this time about the Fed's hawkish pause and what it means for the U.S. economy.
First, we had the dovish hike. Like, what the hell is a dovish hike? I mean, the creativity to wordsmith all these words. And look, I don't envy their job. In the digital age, in the social media age, every single word, every action, every body movement, everything, every piece of luggage you carry is interpreted. And so now they've come up with this idea of a hawkish pause. What does that mean? Well, in December last year, everybody said, "Oh, they're gonna pivot. And the stock market surged, and everybody's like, "Oh, this is great." And now we've had this, not incredible, it's crazy. I mean, maniacal. I mean, it's true mania run in some of the tech stocks, particularly around AI, just on nothing. On literally nothing. And in terms of the results of the companies, the tech is great, but Microsoft invests something that's worth 10 billion and their market cap goes up 200 billion. Or Google promises $1 billion order to NVIDIA and their market cap goes up 200 billion. Or this company C3 AI. And look, I've been wrong in the sense that this stock literally should be zero. The stock should be zero. Whatever they earn in revenue, they lose. Like they make 60 million in revenue every quarter, they lose 60 million every quarter. They eviscerate cash. There is no business there. And this stock is up like 400% this year because its ticker is AI. Everyone thinks it's open AI. And that's just stupid. So the market's lost their mind because of this belief that somehow the Fed's going to, as you said, inject liquidity, but they're not. I mean, save the 300 billion that they did in an emergency around SVB, which reversed a whole bunch of the QT from last year. They're definitely not loosening. They have not, they stopped hiking, maybe. They said maybe there could be a couple more. But they have not reversed and they have not started injecting liquidity and they have not stopped shrinking their balance sheet. So it just doesn't make any sense. And if you use the discount rate, the average discount rate of 5.25 today, the valuations are just stupid, right? We've had the S&P multiple expand in a world where interest rates went from 1 to 5. It's completely illogical. If you can do math, right? Which math is hard. That is one of my hashtags. It just wouldn't happen because earnings have gone down, not up. So everything's wrong with that picture. Now, China, on the other hand, quietly, money printer go burr. They're quietly printing money, lowering interest rates. Their currency's off 5%. That's a big deal. Stock market had surged from October, then fell, gave it all back. But now in the last 2 weeks, suddenly is up again because people are like, oh, wait a second. They really are printing money. Their GDP really is going to be back to 6%. They really are focused on growth. Now, my favorite, Michael, is they've got a new bill, broad-based, they call it a white paper, actually, which I think is kind of funny, on crypto, that may reverse the ban. Shocking. No, not shocking. Like I said, China, I've been talking about this for China's playing Go. They're playing a different game. The rest of the world is arguing how to set up the checkerboard. They're playing a different game. From the lockdowns, which they fomented around the world. Well, why did they do that? Why did they destroy their own economy for 2 years? To gain market share, to gain a pause, back to the hawkish pause. They gained a pause in activity, pollution, all kinds of things. They had a big reset, and now they're stepping on the gas and sprinting away. They're first to CBDC. They're going to be first to a broad-based digital asset system. I mean, they're kicking our ass. It's funny. Yeah.
Meanwhile, Bitcoin has reacted to bullish news, making a new weekly high on Saturday. On Thursday, the leading crypto asset dropped below $25,000, a result of the aggressive crackdown on the industry by regulators and Fed Chair Jerome Powell's announcement that there are going to be more rate hikes after this hawkish pause. Bitcoin lost about 4% of its price from the previous day. Ether also dropped to $1,620, almost a 6% decline from Wednesday's levels. That was the altcoin's lowest price since March 13. With BlackRock's news, Bitcoin picked up on Friday and Saturday, hitting a weekly high of $26,769, its highest price since May 8. Ether also picked up, hitting an intraday peak of $1,766 to begin the weekend. What are your thoughts on Yusko's assessment of the U.S. economy and his thoughts on BlackRock's ETF application? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.